Hey, kings and queens, it's Sandra Fenwick, your mortgage expert. I hope all is well. I wanted to come on and talk to you about mortgage interest rates. Now, we are in February 2021, and we know over the last few months we've had record low interest rates. But what determines the interest rate that you will receive when you do your mortgage loan? You know, it can be a whole bunch of things, but credit score is one of the biggest factors, and the amount of your loan, the area that you're buying in, the amount of days you need to lock your loan, all of those things are factors on what your interest rate will end up being and what it will end up costing you. Now, Federal Housing Administration, the FHA, will allow you to get a loan down to a 580 credit score. But that means your interest rate is going to be a little bit higher, or you may end up paying what we call points for an interest rate. So the key point is trying to make sure that you get your credit score as high as possible so you can get a decent interest rate. Magic number is about 640 or above, but if you have the money and you don't mind paying the higher interest rate right now, I can get you a loan at 580. But let's try to get you to 640 or higher. Now, even if your score, let's say your score is 720, and I may run your to see what your interest rate may be, I have to put in all your factors. I have to put in how much your loan is going to be. I have to put in what area your loan is going to be in, how many days you're going to lock your loan. And locking your loan means once we get your loan into the bank, we say, okay, as of today, this interest rate is 2.65. Let's lock it. We're going to lock it for 30 days. So that way, this rate cannot change. This client is going to get this rate. Because as we know, interest rates change every day, sometimes several times a day, depending on what's going on in the market and the Federal Reserve and with the mortgage-backed securities and all those things. So when you get in and when we know the interest rates are low, and we may hear something on the news that may say, you know, interest rates will be going up soon or something, lock your rate in. So, and the lock determines how much your interest rate will cost or what type of interest rate you would take as well. So when we go to run this search to figure out what the interest rates are, we have your par rate. Now that is the rate of your interest that doesn't cost you anything. Now you have the option to buy down your interest rate, and you also have the option to take a higher interest rate and get a credit to go towards your closing costs, down payment, and all that good stuff. So I would say, okay, Mr. Customer, your interest rate today at par will be 2.65. But if you want to go little bit lower, and maybe you want to go to 2.25, it'll cost you $3,000. Would you like to lock it at 2.35 and pay $3,000, or would you like to just go with 2.75? The borrower may say, oh man, okay, so what are my closing costs if I stick with 2.75? Okay, your closing cost is going to be this. Ooh, I may not have that much. Okay, so you have the option now. You can take a 3% interest rate, and I can get you a lender credit of $1,200. That $1,200 might be what you need to make sure that you have all the money you have when you get to to get to the closing table. Because something may have come up since the time you were pre-approved and the time we're going to close that you had to spend. Maybe your car may have broken down and you had to spend $2,000, $3,000 to get that fixed. Now you're like, okay, where am I going to get this money from? You have the option to take a higher interest rate. So the bank charges what it charges for your loan, and the bank is going to make a certain amount of money for your loan. So the bank says, okay, you take this par rate, this is what I'm charging you, this is going to be, this is the interest you're going to need to pay me over time based upon your credit score and all those things, all those variables that I mentioned before. Or the bank may say, okay, you need this money, I'll give you a credit, and you just pay me a high interest rate, so you're going to pay me back that money I'm giving you now over time. Or the bank may say, oh, you want a lower interest rate? So how about you pay me this amount of interest up front, and that way you pay a less amount of interest over time, so you get a lower interest rate. So that's how that works. And I'll do that with each and every client. I'll call you when it's time to lock your loan and say, hey, rates looking good today. Do you want to lock today? It's up to you. I can't make you lock. You can say, no, I want to wait and see if it's going to go down more. Or no, I've been watching the news and they say that, you know, they're about to do a rate drop. Okay, that's up to you. So you can decide not to lock it. You can decide, okay, Ms. Fenwick, I want to lock it. Okay, as of right now, your par rate is this. Do you want to take that? I want it to be a little bit lower. Okay, you have some extra money. You can get a 2% for extra $2,000. Some clients say, yeah, I'll pay that $2,000 if my rate is going to be, what's the difference that's going to make in my payment? Oh, it may save you $60, $70, $80 a month. Or it may save you $120 a month over time. So my client may say, I want to go ahead and get that lower payment. Let me go ahead and pay this up front. So there are limits to how far you can buy it down, but that is an option. Or my client may say, okay, I need a little bit of extra money. I'll take the 3%. Okay, so we'll give you a credit of this, and this is what your payment going to be. Your new payment probably be about $50 more a month. Clients say, oh yeah, well, I can pay that extra $50 a month, you know, if that means that I'll get this money and I'm able to close on my house. So yeah, so hopefully this helps you understand interest rates a little better, buying down the interest rate, taking a lender credit. It's called yield spread. And I shouldn't have said that because that might confuse you a little bit more. But taking a high interest rate for a credit, buying down your interest rate to pay the interest up front, or taking the par rate. It's not going to cost you anything. This is the rate I'm going to give you based upon your profile of what you're working with right now. So, you have any questions about this? This went a little longer than I wanted it to. Please give me a call. You have my cell, 301-326-7555. As always, you can reach me on any of my social media platforms. Just inbox me, DM me, PM me, whatever all that means. Or you can comment below. Please like this video. If you think it'll help others, please share it. And if you're on my YouTube channel, please subscribe. All right, guys. Talk to you soon. Bye.